for Trading Buddies Thursday edition, this 7th of September 2023. Glad you could be here. I'm also glad that it's Thursday. Been a long week. Working hard, I've got to say. And for that reason, not a lot of time in front of the charts, but what I have seen in front of the charts has been quite interesting, I must say. We'll start with gold and work our way back as we always do. So let's do that. And we'll look at the 1 hour chart to see if we've got a breakout trade today. That's not gold. That is gold. And we do have a range that's reasonable because we can get our entry above the daily pivot, get DR1 into play because we're using the pivots as our targets. And entry there to DS1, not too bad. I don't mind that. And we are reasonably in the middle of that range. So this all looks okay to me. Let's work it out. We've got a high here at 1920.69. Just hang on 2 secs and I'll get the right boxes in front of me. There we go. What did I say? 1920.69. So we'd make that, let's go with 1920.75. And the low is here at 1916.32. We'd make that 1916.25. So only a very small range today of about $4, $4.50 to our first take profit, or to our target is greater than that to the downside at $5, and to the high side it's just about 1 to 1. So I'm okay with that. We will trade that today. The low is a problem. I'll grant you that. But if it does break here, then you would anticipate it would go to support. So I will set that up. Buy stop, we'll set that first. And I said 1920.75, did I not? If I didn't, I should have. And the stop loss is the low of the range at 1916.25. And our profit is DR1. It's not showing me what that level is. Well, we'll just anticipate that level. It's 1924.85. 1924.85. That's close enough for me. Obviously, I won't place that until we get the nod. The nod being, of course, the Open of London, which is not too far away. About a minute and a bit of a timer on, actually. Minute and a half. We've got a few. Just excuse me a second. I'm being distracted by YouTube. Got a few things to look at today, actually. We're in a couple of trades, both involving the CAD. One of them just in profit, one of them just in drawdown. Pound CAD short and CAD Swiss long. Ash should have done okay on CAD Swiss. He got in way, way before me, as is normally the case. I'm hoping he's bagged some coin in that one. Righto, we are now 30 seconds away. I think I can actually place that order. That's not a good thing to do because you could get a spike, but I think we're okay. All right, so the buy is in place. Stop loss here, entry you can't see, but there it is. Take profit there. Well, let's put the sell in. The order. Anytime you're ready. So stop. At 19, what was it? Low of that bar, why can't I see it? 1916. Why won't it give me the level? That's a pain. There we are. No, that's the buy stop loss, which is 1916.25. Okay, that's what we need. 1916.25. And stop loss, this one is 1920.75. The target, DS1, so they show me what that is, but it is 1911.25. That'll do. $1911.25. Okay, we are set like jelly. Good to go. So there we are, long above the bar, target here, short below the bar, this bar, target here. Daryl, you're the only person in the room, so I don't think I need to explain myself as to what we're trying to achieve here. Sure, you're up to speed with it, mate. All right, let's have a look at gold through the week and see exactly what happened. I haven't been trading the breakouts, but let's see how they would have gone. This one doesn't look good. There's your high. That's not the 9 o'clock bar, is it? 8 o'clock bar. So there's your high. There's your low. So you would have been taken in short. Maybe you would have got DS1. Not sure. I could put the extensions on to check that. Maybe you did. Not sure. But if you didn't, you would have been hammered by that candle there, which of course was a news event, which I didn't like, frankly. On Tuesday, that looks like an outright winner. Yep. So you would have been entered short here, and you take profit at one of those. And that's just still going. Wow. If you'd stayed in, that would have been great. On Monday, we didn't take the trade because we were too close to the daily pivot, as I recall. And yes, we were too close to the daily pivot. We were coming down. Where's the 9 o'clock bar? That's it there. That one. Okay, that would have been a winner. 9 o'clock, he would have gone short. And wow, nice one. So Monday, Tuesday, not sure about Wednesday. And now we are, Monday, Tuesday, okay, not sure about Wednesday. What about today? Well, we don't know yet, do we? Pretty simple. But you've got the parameters, and we are trading gold as a breakout today. Righto. Speaking of gold, let's have a look. See, I'm still very bearish, this pair, gold versus the dollar. And what I'd like to see today, to be fair, is a pullback maybe to the trade line, which of course is the top of our channel, our descending channel. But this to me does look like it wants to come and have a look at these lows and certainly the trend line. So that's what I'm focused on, trading gold short, but I do want to see a pullback today. Definitely do. Not much else to say really on gold. It does look extremely bearish. And I said on Monday that this area here was of very much importance because we had the break of the trend line. We had a horizontal level through here, and we also had a false break scenario coming through here. So it was going to be, in my humble opinion, and of course we had this trend line here as well, in my humble opinion, it was going to be a one or the other. And it looks like it was the other. If you're bullish, obviously. I was not, but I haven't found a way into that short yet. We will try. Today looks like it's tested the daily pivot. I don't really want to take that today. I'd much rather see a deeper retracement, and back to the trade line would be good. There is a little bit of a level through here as well. Horizontally, it's been that resistance area here before it broke through, and here again, resistance back underneath it, and that's what we're retesting, hopefully today. Then tomorrow I can look to trade it short, but not right now. What else is on the radar? Well, we've got 2 orders in the market. Pound CAD is one. We're in profit there, but not looking particularly keen. We're headed towards the bottom of this channel. I would like to see some follow through today, obviously, but I was anticipating a retest of the breakout area and the pivots at some stage. Hopefully that's after we hit take profits number 1, but at this point in time, it looks a little bit indecisive. CAD Swiss is the other one that I have been triggered into. And Ash got into this on Monday very, very nicely. He's already probably racing to the bank to get some money for the weekend. But I'm waiting. Don't laugh. I know you are. and I'm anticipating. Well, we're at a crucial point here. The monthly pivot is very much in play. And if we were to close below that today, I wouldn't be anywhere near as keen as I am at the moment. That news event yesterday tipped me into this, and I hate that when that happens, because sure as God made little green apples, you get a retracement on that. That's exactly what has taken place. And the resistance is holding at the moment, hoping that's not the case, of course, and we do get taken into this, into profit. But right now, nothing to brag about, that's for sure. On the radar, look, I thought dollar Swissy was interesting because of where it is. It's at a resistance level. Let me probably preface this by going to the dollar index. And I've been talking, I don't know, forever probably about this range and how it would fill. And it looks to me, for all intents and purposes, is that will happen. And the only problem I have here with trading dollar Swissy, well, 2 problems really. I don't want to get in after 1, 2, 3, 4, 5, 6, 7. This is the 8th week, right, of dollar buying. You want to go back in the chart quite a distance before you can see that precedent. I can't find one going back to 2020 anyway. I'm not inclined to go back any further than that. But you can see that this has been on a rantan since 2020. Or into 2021. Not once has there been 8 weeks of buying during that time, and it's parabolic almost. Are we expecting that to be the case now? Answer for me is no. Buying, yes, but 8 weeks, I've got to start thinking this is due for a pause. It doesn't look like it at the moment, I've got to say. But like I said on Monday, there's nobody selling dollars at the moment, and that's kind of key to everything. So it's very, very difficult for me to go long or short anything against the dollar because I'm expecting retracement, yet the strength is there. Tough one. And if I was to trade anything, it would probably be dollar Swissy. But as you know, I'm exposed to CAD versus the Swissy as well. But with this chart, obviously I can't trade it today, but I'd like to see this pullback. That would help, and then I could look for it tomorrow. But like I said, it's pretty tough to trade it either way at the moment, given that we're in the 8th week and eight strong weeks, I've got to say, of dollar buying. What else is on the radar? Well, I keep saying this pound Swissy, and pound Swissy because of this scenario. I'll keep reminding you of this because one day it's just going to smash out of here. And then I'll be able to say, see, told you. This candle here is the key to this. Big reversal bar here at all-time lows. Then a follow through with this bar. Since then, which is now 10.5 months ago, not one candle has pierced the high or low of that bar. Not one. So we're now in the 11th month, as I said, And at some stage, this is just going to skyrocket out of here or fall like a waterfall, one or the other. I'm anticipating the former, and that is long. So I'm really keen to find an entry down in this basement area somewhere. Weekly chart hasn't kind of given me anything at this point in time, but the daily chart today looks just a little bit nice because I've got a warning slingshot candle pattern there, and I've got a second warning slingshot candle pattern there. If this wasn't a low test, high test combination, I would have an order there right now. But it is a low test, high test combination, which suggests to me that the market's got no flipping idea what it wants to do at that point. And at this point, it's going to test both or either, the support or the resistance level, whether that's false or otherwise remains to be seen. So I went down to the 4-hour chart and had a look and thought, still interesting, huge base here. If I get a breakout, maybe find this support area, then we climb back above that trade line and retest it, then I've got a reason because I can get some money in the bank before this resistance area. So that's exactly what I've got in my head. Whether or not that will play out, of course, is beyond me. I don't know, but I'll keep my eye on it. And if that is the case, before I go to bed, I will look very much at trading. That won't be before I go to bed. It'll be in the morning because I've got 4 hours, 8 hours, 12 hours, 16 hours, 20 hours before I can actually trade that as I've described. But certainly on my radar and continue to be until that breaks out of that range. Pound versus the yen is also on my radar, not really because I want to jump into it, but because of the chart pattern that I see. And the chart pattern that I see is very much a descending triangle, which looks something like this. So we've got a fair bit to fill in here, maybe, but I'm watching this like a hawk. Now, I don't know which way it's going to break out. I would suggest that it's looking more bearish than bullish at the moment, or is this simply a retracement on the main theme? Retrace, breakout, retest, go. Geez, why didn't we trade that? Retrace, we've got to come back to here, in my humble opinion, before we go that way. So looking for this maybe to go break, retest, trade it to there, or false break back underneath, retest, trade it to there. I can't trade it long at this point because there would be my entry at the moment. And I'm kind of bashing my head against this level here, even that level there. So I can't trade it long from here. Not that I'm there at the moment, but I need to see either a false break or, like I said, this test down here of the bottom of the channel before I can go long. So bearish by nature on pound Swiss at the moment. Pound yen at the moment. Yen, again, very, very difficult to trust. So if I do find an entry there, it'll be very small risk. But that's what's on my radar with pound versus the yen. Euro versus the yen was quite the reverse today. And I had a look at that as well, because it's at the bottom of the channel, right? Has come back inside and looks for all intents and purposes to me as though it's broken the monthly pivot, broken the base of this channel, and then come back above it and retested it. The one thing that does concern me is it also got 1, 2, 3 false breaks of this level, which means that at some stage this is going to break short, in my opinion. And it doesn't look particularly, it doesn't look particularly bullish to me at the moment, a little bit toppy. So it's difficult to trust. But I think if I saw this current bar today close below the monthly pivot, then I probably would be willing to place an order above it. So that's on the radar for tomorrow. As far as the dollar pairs are concerned, as I said, I think it's very, very tough to get in the market on the dollar pairs at the moment, given that it's so red hot. The dollar's so red hot, but it does need to retrace. So I think that's where I'm at. If I'm completely carefree and don't worry about that, then I'm still gold short. That's my favourite way, and probably anything against the dollar short, to be fair. I was very tempted this morning to trade this bar here on euro versus the dollar, but then I had a good look at the dollar index and the fact that it has in fact been red hot for now, when I say 8 weeks, this being the 8th week. I was very, very tempted because the strength is so much there that I can't see it reversing. I can see it retracing, and we need that retracement. So maybe we'll retest this breakout area before I get interested in going short again. But at this very point in time, it's so bearish. And like I said, 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. Do I really want to jump into that right now? Answer no. What I will be looking to do is, if price comes back into this area, I'll certainly be looking to trade it back to here. So although I'm extremely bearish at the moment, I can also see a challenge ahead. That challenge lies with this level right here. Why? 2 reasons, really. One, because of this bar here, which provided an incredible bounce for this pair, euro versus the dollar. The other is what I've been saying for quite some time, and it's this false break, which that candle represents to me. So the breakout was that one. The response was that one. And I think that level there, should it break, sends euro dollar down here somewhere, especially given the strength in the dollar at the moment. But this level here is crucial, in my humble opinion. It's what, 10666. Oh my God. Of course it'd be 666. It's all about the devil. The devil in the detail. Oh my God, what a segue. How do I do it? Must be Thursday. I better stop before I get myself into a complete tangle. But that's what I'm seeing at the moment. I'm seeing extreme strength in the dollar, as I anticipate. Well, as I said on Monday, who's selling the dollar at the moment? Nobody. But, and there is a big but, 8 weeks in a row is just a little bit too much of a stretch for me. Maybe it does hit there today even. Could be the case, which is where I've been anticipating it will go. And if it does do that, then I'll most certainly be looking for selling tomorrow, without question. But we will see. So that's kind of where I'm at, Ash. Too hard to trust or to trade against the dollar at the moment, but also too hard to trade with it. So I'm looking at the miners, and I'll probably stick to those for a bit.
Yeah, I think that's pretty wise, mate. And as you say, it's a difficult period really to trade against the dollar, because the data is a little bit mixed. I think it's still favored. Oh, good morning, everybody, by the way. Good morning, Paul P. I hope everybody's well. If you've got any ideas, you want to come on camera, you want to come on mic, you are always welcome to do that. Just post in the chat and we will give you powers. Anything really. Charts, questions about the environment, anything you like. This is really
and Daryl, if you could give me just a day's notice of when that Japanese government is going to do what they say they're going to do, or when it's going to turn, I'd be very, very happy, man, because this has got to, if it does start to strengthen, my God, it's got a long, long way to go. A lot of ground to make up.
Yeah, I mean, intervention by the BOJ is probably due. Some extra intervention by the BOJ is probably due. As you say, it's got a long way to go in the other direction, and it will go there eventually. And actually, in some respects, the yen's the most interesting currency, but just not presently. At some point over the next 12 to maybe even 24 months is going to get interesting, because it is so devalued, and either the others move towards the yen, or the yen moves, the other central banks policy moves towards the BOJ or the BOJ moves towards the other central banks. You would suspect that's going to happen at some point. When it comes down to the dollar, as I say, mate, the data's been, as I say, just a little bit mixed. Not only in as much that I think it's probably making people a little bit calmer that a pause is likely, because the unemployment data, weirdly, as we stated on Monday, unemployment data strangely ticked up with NFP also ticking up. So kind of a bit of a conflict really in the data points there. ISM manufacturing yesterday was a really good number, and it sort of suggests that there's still growth in the US economy. Everywhere else seems to be seeing this contraction, including China, which kind of begs the question of dependency. It's a strange situation. But we'll see again. Today we got initial jobless claims. The jobs market in the United States is because it's been a little bit mixed. That could actually go either way, I think. And if jobs data again ticks up, then we could see some further weakness in the US dollar, probably getting towards that kind of overbought situation. We've got the Fed. When's the next Fed meeting? Is it next week or
October, isn't it?
No, it's this month. I think it's the 17th. Yeah, okay. I can't remember exactly when. 20th. Next meeting on the 20th of this month. So we got a few weeks left. And maybe there'll be some buying into that meeting. But then after that, then I think that they probably, with the data the way it looks right now, I think they would be comfortable with a pause. And if there is a pause, then we might start to see the value of the dollar diminish. But whether it rallies right to that point or not, difficult to say. The CAD is obviously the other interesting one, and as you say, I have. I'm not going to the bank. I'll tell you what, but I'll be interested to see your thoughts, hear your thoughts on this one, mate, and everybody else in the room as well. So the situation with the CAD Swiss is, as Jeff says, is that I'm in this trade. Now, if I go onto a day onto an hourly, into a daily, sorry, I'm in this trade, and I got into a few points down here. I haven't yet moved stops, and I really want to see this break and retest before I get these stops. Probably into break even sort of territory or in and around. But after that, but the problem is this, this could turn out to be an inverted head and shoulders and a pretty scruffy one, considering all this stuff. So there could be the head, this could be a left shoulder, and if it does come down, come up and then come back again, it could easily break even, come and take me out and still go in the right direction. So I've got a few questions to answer of how I kind of trade this early stage. And the reason I'm calling it early is that I would love not to take profit here. It'll be giving quite a bit back is the problem if I don't, because I'd like not to take profit there, because when I look at this on a monthly, there's a few things really that really interest me. I'll put that low, and I've put my take profit at the at my desired area to come out. That's where I'd really like to get, but it's like a 30x. So I don't think I'm not sure whether I'll have the wherewithal or the staying power to do that. But this is what interests me. I think that there's probably a level somewhere around here. It's again quite scruffy. It might be there, but the reason that I'm going to draw it there is that if we look at this as a channel and we look at the lows here, we've kind of touched those lows. If we put this line up, then it's somewhere around here. I quite like that. Now that would suggest we're at the lower end of the channel. I wouldn't be interested in aiming for the top of the channel because firstly, it's not necessary. If you get up here, it'd be amazing. And the second thing is this area looks like a pretty strong horizontal level. Now, if you go all the way back to 2011, look at this. This is the low of 2011. That's exactly the spot there. So that to me is a pretty significant area. We're under that area right now. That to me would potentially draw some magnetism towards that particular area. And then I think it's anybody's guess possibly at that point. If we get above and beyond, then it's a whole new ball game. And of course you could be kicking yourself if you've got in all the way down here. But the overall kind of movement of the Swiss of the CAD Swiss is down. So I'm not really interested in trying to sort of be really, really clever and aim all the way up here. But at this point, I'm quite interested in. Yeah, well, I mean, maybe I just don't think I'll have the guts to do it. And especially if we
I won't hang on to that trade.
Yeah.
But every one of the levels you just mentioned, as soon as it's broken, I'm in again.
Yeah, yeah. Well, this is the I don't think I don't even think I'm going to have the guts to get to this point, because as I say, there's still the possibility of getting stopped out. What I need to see really is us take out this area. As soon as we take out that area, then I don't mind. It can flap around here, because then, then we're looking at probably that. If it can take out this high, it can flap and come in, and it can even come back down there, and I should be far enough away, hopefully. But if it's not far enough away, it's probably going to break this level and go down. But if it breaks this high, I think that we're far enough away then to look for maybe another push to the upside. But that's going to be a challenge. That's been a pretty strong level for quite some time. So I'm not sure what drags it up there. I mean, you think about what's going on fundamentally. The nothing has hugely changed, except for the fact that OPEC have kind of come out and they're again affecting the supply of oil, and that's charging oil to the upside. And no kind of secret how correlated the CAD is to WTI. So when we see WTI move to the upside, then it gives me a little bit more confidence to hold on to the trade and suggest that we could go a bit further. But there's a long way to go. Oh, the other thing to kind of consider here, and it's clutching at straws a little bit, but if you look at this move here on in 2020. That was in March, takes us to the high here. That's the highest point there. So that high was in May. So you're looking at 14, 15 months really if you consider this point here. And then we're coming down, and again we're at 14 months here for this low here. We're at 14 months. So there's possibly a little cycle kind of going on here where we sort of like around about to pop up, back up again. I haven't found it prior to this, but which is why it's clutching at straws a little bit. But there's a little bit of equilibrium there. If that can just play this out and maybe give us a third push of 15 months to the upside, and then we can see where we are from that the next particular point. So as I say, mate, that's got no scientific basis at all. I'm just looking at various things and saying, okay, let's convince myself that this is worth staying in and this can happen. So
look, I think my approach is and will remain pretty much exactly as you've described the levels on the way up.
Yeah.
But the channel you've got there is the channel that I'm trading as well. And, to me, this is, like we said on Monday, to me, it's a no-brainer. You've got to give this a try.
Yeah.
If it doesn't work, it doesn't work. It's not the end of the day, especially if you go in light. But if we're right, the potential reward here is just totally worth trying, and that's the whole point of it.
Yeah.
So when you get to those, in my opinion, and that's what I'll be looking to do, when we get to those obvious levels, breakout areas that we're going to retest and new areas, new breakout areas, whatever.
Yeah,
I think the approach that I will take is allow them to break or not. It shouldn't affect you too much. If you're following it, let's say on a daily chart, and it hits that red line, it'll either bounce off, it'll go through it. We know that. So give it the chance to go through it. And if it doesn't, and let's say on day one you get a bounce off it, then if you're willing to risk or take back off the table the profit that you've made less one day, then all you really need to do is put your trailing stop underneath that 1 day retracement. If it retraces for 2 days, you're out, fine, doesn't matter. You've just missed that day's profit, if you like.
Yeah.
But by the time you're up there, does 1 day really matter at the end of the day?
No.
with the I'm not going to say promise, but the opportunity of it going another 2, 3, 4, 5x. To me,
Yeah,
that would be the way I would approach it.
Do you know the other thing
I
about
will
this, of
approach
course,
it.
is the positive swaps. You know, that's another
Yes.
reason why it's
Yeah.
actually not too bad. The ones are kind of, you know, if I consider that I could hold this for you know, a year and a bit, if I did have to stay in for a year and a bit, then the swaps that themselves make up a half decent trade on their own. You know,
Mm-hmm.
and if it actually kind of gets to a level where it's accumulating in value as well, then it's kind of Goldilocks kind of area, isn't it? So that's another reason why I'm willing to try, and really because of the price I've got. You know, I'm really pleased with this price. It doesn't always happen, of course it doesn't, but it was just one of those that that eventually created a signal at this particular point. We don't know what's going to happen sort of in the next sort of, certainly in the next 14 months. It's going to be very difficult to predict, but it was one of those that kind of hit the levels. When you look at this, it was absolutely perfect. Breakout right back into this area here, and hold on this bar. You know, I really like these bars when they kind of like get back to this point here and retest that bar. And actually there was quite a lot sort of down here as well. So there was, you know, this area was a nice area to try and get in, and so far it's holding up, so it's okay, you know, decent area. So I really like the price. Now the other thing on that, you know, about breakout and you know, going a test an area, the other reason I quite like this is that's not been tested. That
Mm-hmm.
point there has not been tested, so that should drag it up there. You know, that's going to be 200, which is, if it kind of gets up there, that's going to be a kind of a 10 to 1 to that point, just a bit better than that actually. So so that's not been tested. But the other thing is, when we look on this monthly, this area is not being tested either. You know, and that's a pretty significant line, as I say. You know, this is back in 2011. We see this low all the way back here, and that's not been tested with any kind of you know, real kind of confidence either. So that's another reason I quite like this point, you know, to come and test these areas and see, so then see what it's about. You know, then we'll see what it's really made of from that particular point. But I won't be interested then. I'll be quite happy to kind of get out at that particular point. So I you know, I've got the trade on, mate, and we'll see what happens. I'd love it to go there, of course, but I'm not claiming to be any kind of profit. If it goes to that point, the entry would have been some skill, no question, but the exit from this point is going to be complete luck. You know, where I end up getting out from this point, it's going to be 100%.
And it's always the hardest part, always.
It is. The only thing is, you see, of course, I'm quite happy to play that luck if I'm free. If the trade is free and you've got a chance to kind of like make whatever, then you know, the luck doesn't matter. The luck is kind of like, you know, it's not, there's no skin in the game except for the emotional difficulty of giving you know, a 10x back when it, you know, sort of aiming for a 30x or whatever. That's the
sucks.
only sort of, that will suck. Yeah, that would be problematic. But you know, as I say, I just want to kind of get the luck will be where it eventually sort of like gets to. But I'd like to kind of get the safety of the trade off the table, and then just see what happens. So that's where we're at.
Let's hope we're still on Monday and we can actually project those again. But I think today's crucial for me anyway, because the monthly pivot's well and truly in play today.
Yeah. Agreed. Catherine's just saying she wonders whether the Euro Swiss might be better, or might be easier, sorry, to trade than the CAD Swiss, because it's difficult to get the momentum going. Finally thought we were going to get some momentum with the CAD interest rates, but they remained unchanged, and the move to the upside was short-lived. And I would concur with that. The only thing that I would add to that is that the speech suggested that they were still, as they are in the Fed, they're still kind of sat there on the lookout for potentially moving rates again, or further, you know, monetary policy of some sort on the hawkish side. So the rate was unchanged, and I think the market expected the rate to be unchanged. If they'd raised rates, this thing would have gone. You know, and it might well have gone through this level, you know, without any question whatsoever. I don't know, but if rates had gone up, then this thing would have gone. So nobody was really sort of thinking about that. But the question really sort of like now comes in: would the Swiss National Bank move either? Probably not. You know, they've got an unemployment rate which was released today, which still comes out at 2.1%, which is as previous. So the labour market is still tight, but the Swiss National Bank have got an awful habit of intervention. You know, they need to remain competitive. And you look at the price of the Swissy against the CAD, very, very high. The Swissy would be very, very high as the CAD's low. You look at the price of the Swissy versus the Aussie, again, very, very high. Very, you know, it's the Swissy probably, in accordance to the Swiss National Bank, is probably close to being overvalued. And if things calm down, and I think that's the thing with this stuff, when the environment starts to calm down, the Swiss National Bank tend to come in and say, you know what, we've got to try and get competitive. We've got to try and fix this environment because it's not good for us. So it's not good for them to be down, you know, up here, if you like, if you flip this chart on its head. So Aussie versus the Swissy, very, very low, making the Swissy very, very expensive in many respects. Swissy Sing, very, very high. Again, uncompetitive. The dollar, very, very low. And this is the dollar. This is King Dollar. And the Swissy is this is the dollar versus the Swiss. So the dollar low down here. So uncompetitive. So and the yen is the main one. Look at that against the yen. We're looking at monthly charts here. This isn't an hourly chart. This is a monthly chart. So right and across the board, we talked about the yen earlier, mate. But I tell you what, if you think anything, if there is a change and the wind all of a sudden changes, it's the Swissy which is going to get blown over. Okay, the yen as well, fair enough. But the Swissy is going to get blown over. So, you know, and you could keep going. In fact, let's go with Euro Swiss. Euro, look at the Swissy. You could keep going. You want to find the most overvalued currency right now, it's the Swissy.
No argument from me. I think the only headwind with all of that, and I agree with all of that, the only headwind is the market really has to turn dramatically risk off for this to play out.
Yeah.
In long term, I mean, yes, deep retracement, 100%. I don't think that can't. I don't think that can't happen. We have to have a deep retracement, but whether it can actually reverse is going to depend a heck of a lot on market sentiment.
Agreed, mate. And that's going to be to do with the inflation narrative, and the inflation narrative in the United States much better than we were a year and whatever ago.
For sure. Yep.
You know, much better right across the board. You know, we're around about 3% and a bit in the US. We're around about the same in Canada. Even the Bank of England came out yesterday and said that they believe rates are near their peak. Because now what I think central banks are trying to do is raise interest rates, you know, high inflation, raise interest rates, then leave them there and see when that monetary policy sort of filters through. So it's an 18-month sort of turnaround. So this is what we're talking about with the value of the CAD versus the Swissy. 18 months for policy to kind of take effect, which is what we've had going on. A rate cycle which has lasted, you know, I mean, it's been crazy quick, but a rate cycle which is we're talking about a year plus. A pause cycle, which could also end up being a year plus, and then if the pause has kind of taken effect, then maybe a sort of a down cycle. So within the next 24 months, we could really sort of, you know, start to see things change. But during that time, of course, sentiment changes before that. If they pause and they pause and they pause, the sentiment will start shifting towards growth, and which is difficult because then inflation kind of, you know, doesn't kind of get curbed again. So it's a very, very strange scenario. You're absolutely right. It's going to be about sentiment. But at this stage, I wonder whether we're in that kind of range situation, you know, where we might start to see things like the CAD Swiss and the dollar Swiss and even this Euro Swiss hit these ranges, come back, hit these ranges, which really kind of puts us back to coming back up here and coming back down, coming back up here. But before going up, even mind you, in saying that, you know, really we are just at the bottom of a huge range down here. So it might still be that this could come all the way back up again and still kind of qualify for that that particular that thesis that whether we might be in a bit of a range situation. So yeah, I think there's a chance anyway that we get a bit of a rally on here. EuroCAD, which is what Catherine's saying, is an interesting one, because the EuroCAD, you look at the data sort of in November. I know we're a couple of months away. Data in November, very bullish for EuroCAD, extremely bullish. You know, crazy really. The moves that we tend to see in the EuroCAD. I don't know if I've got it on here. Yeah, I do. Look at this. Look at this EuroCAD. This is November 21st, right the way through to the end of December. Up. That's one. And this is no strategy. Just buy the on the day and sell on the close. Two up. Three up. So last 3 years, three up. This year, I think you could argue near enough flat. But let's call it 3-1. Look at that huge move up. So 4-1.
When was that? When was that? There'll be extenuating circumstances there.
18th, yeah, but quite possibly, mate. This one flat, but we'll give it to the losses. 4-2. This one definitely a slight loss, so 4-3. Massive win here for the Bulls. 5-3.
EuroCAD, 2015.
EuroCAD. Yeah.
Ooh,
you're buying here,
you would have.
yeah.
I would have thought the reverse. That's Brexit.
Beginning. Look at this. Bang. 2013. So we got 10 years where the Bulls tend to sort of not only do the Bulls beat the Bears for the EuroCAD during November, but when the Bears win, their victory is very, very bitter. Really, so there's hardly anything in it. So yeah, EuroCAD during the month of November, very, very strong. Sorry, month of November into December, 21st of November onwards, very, very strong. So if we are looking for a bullish move in the EuroCAD, which right now, if you're looking at this particular picture, V-shaped recovery, this is on a monthly chart, V-shaped recovery, we hit this resistance point here, we come down, this is a range, isn't it? I mean, we basically sort of like stuck in a bit of a question mark here. Is this kind of creating a complex inverted head and shoulders? Possibly, and if it was down here in November, then you would go for the inverted head and shoulders. If it's up here, I don't think you'd be so keen. So it depends on how this looks. I wouldn't be ready to do this yet. But again, you know, when we talk about levels untested, big move. This really needs to come down there. You know, then that would be of interest during November. That would be a really kind of a really good and keen trade. And I have to say, the Eurozone's data and fundamental picture is just weakening it's just, you know, continuously weakening. Germany today posting under than expected industrial production numbers. I mean, it's just the German economy is in a bit of a fix right now. German industrial production negative 0.8%, better than previous negative 1.4%, but still in negative territory. Industrial production
which is a bit of a worry for the euro, given it's the strongest economy in the eurozone. Wow.
Exactly, mate. Exactly. And you know, Christine Lagarde has changed her tone as well. You know, she was all kind of, you know, very, very hawkish, really against her modus operandi. That's just not her way at all. Very hawkish. Then all of a sudden, she's like, you know what? We'll see where monetary policy plays out. We might be okay here. Big problem is going to be the winter. Does Putin play his cards? You know, and maybe sort of like start really cutting down some of the production. Is there another kind of interplay with Europe and Russia, where or NATO, where he sort of like, you know, utilizes and weaponizes the main commodity that he provides? Do the BRICS kind of come forward and do something? You know, the winter months are going to be quite crucial, I think, to where we see the sentiment going, and where 2024 is really going to be leading us. But you know, we are in the last quarter of the year, and I wonder whether we might start seeing some positioning for 2024.
Maybe. Well, as soon as we hit November, I start to think of Trump. But there's a lot of water to go under the bridge before that, of course. And do they have to have a nominee 1 year out? I think that's the case, isn't it?
Do you know what? I'm not really sure, but I would have thought so. I would have thought
Mm.
so. Yeah. Well, that's the other thing, isn't it? 2024 sees the US election, so there's a lot going on. And actually, is there something in the UK? I'm not sure if next year's the UK as well. There's a lot going on right now. Your call on the pound CAD, I think, is a good one. You know, because I think that now we've got Bailey coming. Now Bailey said what he said. And you see GDP actually from Australia yesterday, much better than expected. That was a surprise to me.
Yeah, me too.
You know, given what was going on in China. So
Although,
Aussie.
having said that, if I can, sorry to interrupt, there was a twist in that, and I don't really understand it because I'm not an economist nor a fundamentalist. But the commentators here, whether they're right, wrong, or indifferent, is not for me to say. But they're saying per capita GDP, we are in a per capita recession. What the hell does that mean?
So I guess it's sort of nominal or real. That's just a different way of saying that, isn't it? It's just like nominal GDP or real GDP. So if you actually consider maybe they're going on the growth from last year. The growth from last year where you're up, but actually if you sort of like consider where the economy should be, I guess pre-COVID, if you were sort of like looking at where we were pre-COVID and what is actual growth, not growth from last year when it was at a low base. I guess it's saying if you go from -4 to -2, that's growth, but actual growth is going from 0 to 2.
It's weirding me out per capita. What does per capita is taken into account with GDP? Is it not?
I don't know, mate. Well, yeah, I mean,
it's part of the factoring. It's all
funky
products
language,
and services. It is. I mean, what the hell are they talking about?
Yeah, yeah, funky
but
language.
That's what they're saying. They're talking, and they're probably politically motivated, I would imagine, given that they just want to bash the government. So they come out with these weird and wonderful things, and it would be actually I should have taken note. They would probably be right wing commentators, I should imagine, given that we've got a Labor government.
Yeah, UK housing prices again dropped today, mate. -4.6%, and it's been on a steady decline to the downside. So further disinflation. So if you sort of like think about Andrew Bailey's comments yesterday, closer to the peak, and I believe that they have to be close to the peak purely because of the choking of the economy. But of course, as the economy chokes, inflation starts to ease. So disinflation, actually deflationary numbers in some respects, because we're at -4.6% on the house price. Month on month, -1.9%. So a big drop from last month. So I think the Bank of England may well pause. That the next meeting might be quite a surprise for the market, because I think everybody was looking at a jump to 5.75%, which is still the likely outcome, to be fair. However, 21st of September, there's definitely some inflation, CPI data before that particular point, possibly some PPI as well. What happens if that drops down to 4? I mean, it'd be a massive reduction. But what if it drops down to 4 without them having to have done much? Will they say, let's let this breathe a little bit, or are they going to go, right, one more hike and then we'll let it breathe? That seems the most likely to me. But I do think that the UK is showing some relatively extreme signs of disinflation. So the pound CAD, to me, you were calling it on Monday. Pound CAD to me looks promising.
Yeah, we're in that. We're in that short. Yeah. So far, so good. We shall see. What do you reckon about NASDAQ? You're a NASDAQ fan. I've got a potential here false break of resistance, and I'm seriously considering shorting this again.
Yeah, makes sense to me. If I bring if I can do this with pivots, can I? I haven't got pivots on this one. Well, we're on the monthly pivot. Let's bring the monthly pivot
Yes,
in
we
at least.
and we've just crossed the weekly. They're all stacked together then.
Oh, here we go. Right, let me do this in red, just so it looks the same as my other one. There we go. Actually, looks a bit odd on this one. Okay, notice the futures market is different, but maybe some other pivots are sort of play. But we've crossed that one. Do you know what I've got with the Nasdaq? In fact, let's forget this pivot because I'm not really that interested in the pivots. It's more the price. What I'm finding with the Nasdaq is that there is a kind of steep-ish trend line. Now I don't know whether.
Yeah, your chart's completely different. Is that futures?
No, this isn't futures. This is, oh no, sorry, I'm on the wrong. I'm on the wrong index.
Oh, you're on the S&P. Yeah.
I'm on the S&P. There we go. Let's get rid of that.
That's better.
This is what I want. Okay, so let's put that there. And we'll do this. Now, the fact that we are under this level now, you know, we spent a bit of time above it. Now we're under that level. That to me is in a way the price point and the signal that I've been waiting for to suggest that this is going lower.
Precisely my trade. Yes.
Yeah. So this I've been waiting to play out, and this is really what we've got now. So we've got the head and shoulders pattern. So we've got a reversal pattern up here. We've got you know, maybe that angle. It's going to be a bit of an odd one. I think it's maybe not that angle. I like to sort of see head and shoulders pattern with an equilibrium tool, preferably. So if we join the highs instead, it's probably about there. Yeah, quite like that. Somewhere around about there. So that looks to me to be the initial target from this particular point. But of course, if you're able to get into this on a right shoulder, it's a great area to get in, because if it does break, then all of a sudden you're kind of aiming for a really good multiple here. You know, we could be looking all the way back down to this point here by the looks of that. Which isn't anywhere near as far down as my my ultimate target would be. Because when I look at the Nasdaq, what I really see is, again, one of those areas that just hasn't been tested. These parabolic moves to the upside tend to get, when they start moving against again, they tend to get moved against relatively quickly and quite aggressively. So I'm looking at this as a buy zone for the Nasdaq. Now, if it comes down to this point, there will be some bulls that are interested, but that's still not really that's not my preferred area. It's down here. You know, that's what I like to get to. The issue with the Nasdaq is that it doesn't always come as far as you'd hope, because shorting the Nasdaq is tough. You know, it's such a bullish index that that kind of getting on the downside is hard. So I like the downside. I'm just not sure whether I'm that comfortable playing it. You know, the amount, and only because the amount of times I've tried to short the Nasdaq and been burned. You make money very, very quickly doing it, but when you get in and you're wrong, the amount of times that you're wrong they're so high that that I prefer to see if it just drops on its own. Not that I don't short the Nasdaq, as you know, mate, I do short it, but I'm always a bit nervous shorting the Nasdaq. So I've got to be really comfortable doing it. And if this does drop, then really what I'd like is to see it drop and see if I can pick it up long here. With the US economy bubbling in the way it's bubbling, and the potential for that dollar to, as you quite rightly pointed out, the Nasdaq will tend to do what the opposite of the US dollar. It's getting close to the top of that band. You know, what did you say? 8 weeks or 6 weeks of upside for the dollar?
This is the 8th week in a row. Yeah,
the 8th week in a row. I mean, that can turn, and if that turns, then the Nasdaq is not really such a comfortable short. So if it is going to come down, it's probably going to need to come down in the next couple of weeks. Now, September, middle of September to the end, does seasonally tend to be a time to take profit in stocks. So again, there's lots of things in the favor of this thing coming down. But I don't think, we can't treat this like a currency, where they tend to kind of go up and then they tend to come down and they tend to go up. It just doesn't really happen with the Nasdaq. You look at the Nasdaq over the long term, it just goes up with a big move. Then it goes up. Now, can it have a big move to this point here? I hope so. I hope so, because there's some value to be had there. But I've got to be really comfortable shorting this, and I'm not yet comfortable. I don't know why, because this is really what I was This is what I was waiting for. Just that break there.
Yeah, same.
But I suppose maybe the reason I'm not that comfortable is that this is a problematic area.
Exactly. Paul P has put that level to me, and he's 100% right. At that point, at this very point right now, you've got a break and retest of that level.
Yeah.
So that does complicate the issue. Without
it does,
thanks, Paul.
And it's a higher low. It's a higher low. That's the problem, isn't it? I mean, this thing is on a daily. This is in an uptrend. On a weekly, it's in an uptrend. We tried to break through these lows. That failed. Possibly there's a turn here, but I don't think that's particularly clear. On a monthly, this is in an uptrend, and this is where it becomes difficult. On a 4 hourly, we are seeing this little, a bit of potential move to the downside, but I think it probably does come here, but I don't. The environment doesn't. It doesn't feel like much of a panic. What I like to see with the Nasdaq for a real move down is just out and out panic. Because usually what will happen is it'll come down, and it's a buying opportunity for the bulls who love AI and Nvidia, which is up over 200%, by the way, on the year. I mean, how can you have that with a stock and it not come down? We're talking now
but
about
if a robot was suddenly to kill someone, then you've got to. And I'm sorry to put that into the mix, but if it horribly went wrong, AI at the moment, then this changes very, very quickly.
It does change very quickly, mate. I mean, sort of like trading that is difficult, but you're right, because when it comes down to everybody kind of like getting on the bandwagon with AI, we're not early in AI, but we're early in its adoption, globally, and with people accepting kind of like the situation. And of course, that kind of thing that you are suggesting could happen. I mean, we are in a time of conflict, so who knows that people aren't working on those robots right now to kind of go off and do whatever work they need to be done without any human involvement.
I've got a 100% absolute belief that they are doing that.
Yeah.
There's no mystery about that, I don't think. I mean, look, drones have been doing this sort of thing for ages.
Yeah. So all you need is an AI drone. Exactly that.
It's just the next level, isn't it? And we're there.
They find out it's an Nvidia chip that's in it, then does that affect the company? And if Nvidia comes down from 200 and whatever percent, it's 100 PE right now. So if it comes down, which inevitably it will do eventually, it's going to crash hard. It's going to come down pretty hard and pretty swiftly. That will bring the Nasdaq down, even though it was a nothing stock, if you like, 5 years ago. It's a big player in the Nasdaq now. So there are some worries. I suppose when it comes down to the Nasdaq, the question is this the point, or do we sort of like see this head and shoulders that I indicated earlier, or are we more likely, or are we still possibly going to kind of like check these highs again and get a triple top and then drop?
Well, I think at this point you've got an argument either way.
Yeah.
And until that level that we're basically on right now is cleared, then I don't think I've got the answer. But I'm definitely favouring the downside if that level breaks and we get a retest of that level and the trend line. Then I'm absolutely bearish if that's the case.
Yeah, a retest of the trend line. You're absolutely that would be great. I think my thing is that I was sort of really saying on Monday, if this trend line broke out, then I'd be short. But now I haven't got, I suppose, enough economic data to suggest to me that should be the case. Jobs numbers from the US might do something today. In actual fact, if job numbers come out strong today from the US, the likelihood is we see this sell-off. If they come out a bit weaker, I don't think this is going down. So take your pick, flip your coin, because unemployment at 3.7% last week, and I think that was from 3.5 or maybe 3.3, so a jump, but NFP a jump as well. So I think the employment picture in the US could still go either way, particularly when you see ISM from yesterday also strong. That's not suggesting a weakening economy and a weakening economic picture. So yeah, a difficult one. A strong economic picture in the jobs market is actually quite bad for the Nasdaq.
And I think what we're saying is wait, right?
Well, I have to. I mean, you know, I don't necessarily think that is the best advice. I think if you've managed to get into this short, then why not? To be quite honest, I think why not? Why wouldn't you get in it? I mean, measuring it off, there's your first level there. That's around about 290. Maybe your stops at the highs. You don't get a 1-to-1 at that point. If you break, then it starts getting interesting. But you are asking an index which has got a high probability of going up to do some work for you if you're going to get your even money trade and 2-to-1s and multiples like that. And that's where my issue really lies, I think.
Right. Anything else on the radar, mate?
No, that's really it for me. I think, mate, it's you know, first week of September is almost done. So far, it's been a decent week, but we'll see sort of how that transpires. It gets really interesting in 2 weeks' time. So next week we could see a little bit more rangy stuff, which you know, maybe another thing which we might have going on right now. A few ranges in most markets. There's been the odd one that sticks its head out, but in most markets might be a bit rangy for the rest of this week and into next week. And then week 3 is when it gets interesting.
Makes sense. That dollar's got to cool off. It's got to pause. It really does.
Yeah.
In my opinion, anyway. Doesn't mean it will. It just means it should. Because the chart's telling me that. You know, again, go back as far as you like and find how many times, especially when I look at that, you know, that rapid, almost meteoric rise of the dollar since Christmas time, 2020, through middle of last year. Man, that was just amazing.
Yeah.
But not in one of those occasions in that period of time did we have 8 weeks in a row of rallying.
Yeah.
Or buying, strong buying. It's not just buying, it's strong buying.
Yeah.
So why now?
Yeah.
That's the question I ask myself. So there's got to be a pause and a retracement, in my humble opinion. Yeah. Can't even give you an edge on the euro today because it's already played out. We're all over the daily pivot. In fact, I can't say to you that I'm confident of a direction in terms of the 30-minute charts anyway. I am in the daily, but again, need that retracement. Can't go short, can't go long. Simple as that. So I think we need to POQ, don't we?
I think so, mate. Yeah, let's do it.
All right, let's do it. Thanks for the week, mate. Thanks for being my trading buddy as always. And your message is affirmative. I will be available in about 3 or 4 minutes. Just got to go and pat the dog and fill the glass, basically.
No worries, mate.
Thanks, Paul P. Thanks all for being our trading buddies, everyone. We really do appreciate it. And we have a lot of fun. And we thank you very much from the bottom of our hearts. Have a wonderful weekend. We'll catch up on Monday. See you later. Bye-bye.